In this video, we're going to talk about how to use price action rules to help us identify where the market is going to go and where are the high probability setups. Right off the bat, I can see that the structure is resembling consolidation, a trend range, but we traded down into this. In fact, you can see this is where the session started, so I can mark my initial kill at the top, and prices are slowly working to the downside. But at this point, price action is going sideways. Identify the support, identify the resistance. As a price action trader, I'm always looking for these important key levels in these channels because there's a reason to price action and they will tell me important information about the market. So now this downtrend needs to get new extreme. We have break, push to new extreme. Now, because we traded down, I'm not particularly looking to go long just yet, even though it worked. I'm going to be a little bit more patient. We had high-low confirmation setup, but there is some resistance here. It feels a little bit more aggressive. You're buying off the low, so more advanced trader can consider. By the time I get a failed second entry short, it is so far from the EMA with the body doji bar, so I gotta be careful. I can't take it. Small break and the new extreme for the bullish channel is indicating to me that the bullish correction played out. I'm gonna redraw the downtrend working lower. I cannot go long because the uptrend played out. Market is correcting and prices are trending lower. Now, what happened here is very important because you can see top part of this trend range is very empty. And if we're going to combine it with the initial analysis that there is bearish bias, we traded down, the fact that we can't even break the midline is indicating what? Bearish imbalance. And also you can confirm the bearish imbalance by the fact that you can see the support is moving lower and keeps moving lower. You have so many failed breakouts. So once that is happening, I am pausing, looking to go long because market under bearish imbalance can actually break lower. And this is indeed what the market is doing, and we keep trending lower. Now, because we traded lower and a brand new series of lower highs and lower lows has been established, my goal as a trader is to always look for the correct channel because I cannot have these candles on a chart without a pattern. So if I'm going to start at the beginning of the move, I'm going to copy the trend line, put it at the bottom like this. I have a nicely fitting downtrend. It makes sense. Bearish imbalance into downtrend that can happen. Series of lower highs and lower lows. First swing, second swing, third swing confirmation. So right now the trend is down. And as a price action trader right now, what I'm going to do, I'm going to apply rules for the trending market, which means I'm going to be respecting corrections and I'm going to be looking to sell at the EMA or at this key entry point. Okay, I want to see two-legged pullback. New low, I'm using the counting technique, first entry short, pull back. There's going to be second entry short here. There's going to be break below this bar. It actually triggered below this bar. But of course, as a seller, I cannot sell below bullish bar. But the signal bar is horrible. Tail at the bottom, congestion. You know, you are at the EMA, so you expect push phase to start. But I would like to see some breakout pullback, lower high, for prices to free out of this consolidation. We never got the lower high, and market keeps working lower. So this is what happens during trading market. Push phase, correction phase, push phase, correction phase, push phase. So I expect right now brand new correction phase to take place. I have to redraw the short-term uptrend because I cannot go long as long as this uptrend is in play. You can see how nicely the trend line fits off of these lows. The candles are respecting it. So what's going through my mind right now? Well, we're breaking this downtrend. According to trend line rule, I expect new low to be tested for this downtrend. But I have to be patient. I have to let this price action correction play out. So ideally I like to see break a new high, then push below EMA, and then I will be looking for setups to go short. So let's see what's gonna happen. Okay, we have a break, no setup to sell. Prices are creating the new extreme. So you have a break and new high. And notice what is happening. As a price action trader, you're gonna train your eyes to see the hidden price action moves. And you're going to have an advantage over most traders out there. This is the low of the day, the initial trend range support. You can see right now it may act as a resistance because you broke lower. Traders are testing this key level again. So if this key level is going to hold and if price is going to go back below the EMA, this is the confirmation that you are expecting new low for this downtrend. If you're going to break this key level and you're going to go higher, you would forget about this downtrend. So right now, we are breaking new high, uptrend played out, perfect. I want to see push below EMA and I want to see lower higher failed second entry long and perfect push below EMA is confirming, okay, sellers, they sold at this important key level. Redraw the downtrend. More advanced trader could consider selling somewhere around here, but the signal bar is quite weak because it is a new low, first entry short, second entry short. And this is interesting. We have a new high, first entry long. It broke higher again and reversed down. So this is still part of the lower high. This is a great signal bar. Very tempting setup. Price action wise, it is an okay setup. I was personally waiting for failed second entry long, but this is okay setup to take. It's not wrong because this downtrend needs to get going to trend line rule. Correction played out. Remember, the bias is down. You cannot draw a wider uptrend like this. This is against the main bias. You can see how broad and sideways the correction is getting, breaking new high. So draw them tight because we expect new extreme. So great high probability setup because you're selling at the top of the correction phase where the push phase will start is exactly what you want to do. Can you get a failed second entry long? We can, but you can see failed second entry long triggered below this bar. And this is a weak signal bar, bullish body, quite doji-ish, not with the EMA. It ended up working, but we can't really go short here. Can I get a second entry short? You can see your stop loss goes one thing about the signal bar, so you're still riding the failed second entry long. And now we have second entry short. Mini new low, first entry, pull back, second entry. I was preparing my limit order to go short here, but at the last second, there's a massive tail at the bottom. Prices traded up and they created wick at the bottom, which is not ideal. Context wise, great entry because the downtrend needs to get new extreme. Once again, I like marking this mainly context wise. I skipped it personally. Everything was happening so fast. Had there been no tail or minimal tail, great setup to go short, but the tail at the bottom was a little bit discouraging. But context is great and price action created break and moved to new extreme. So perfect price action. You can see by using price action, you can predict exactly where the market is going to go and where are going to be the high probability setups. Okay, you may not get this up every single time, but it's okay. You at least understand where you expect the prices to offer you important setup. So now to break a new extreme, what's going through my mind? Well, downtrend played out. So we can have correction or reversal. So I'm generally pausing looking to go short. There was additional bearish leg working lower, which was quite strong. It made me think, okay, there can be some downtrend continuation, but prices quickly reverse back above EMA. So right now what I'm going to do, I'm going to be a little bit patient. I cannot go long because this was quite a decent push down. I need to see proven uptrend first before I'm going to start buying. But at the same time, I cannot sell. Downtrend played out and we are above the EMA. And prices keep working higher. So right now, we have prices going higher, confirming the fact that the downtrend played out. And I can look for wider channel like this. We have a new high, first entry long, second entry long. Market moves in pairs of twos. But there is quite a gap between the EMA and the body. And also, you can see this first leg just created a break in new high for the second leg. It looks too much like two legs, even though I'm predicting wider uptrend because it makes sense based on the market context. You know, two legs up measured move. What if there's going to be some stronger pullback and then you're going to go higher? I need to see that one more push higher to confirm the wider uptrend, and this is exactly what is happening. You can see prices keep working higher. We're past this measured move. So because there is another strong leg working higher, the explanation is there has to be wider uptrend. So right now, the market is in a bullish trend. Downtrend played out, bullish trend established. So you are switching bullish trend rules, which means you're going to be drawing the short-term corrections and you want to see second entry long at the EMA. So I'm thinking about second entry long at the EMA. Can I get a second entry long 2 key entry points? No, we broke below. You have a second entry long here, but it's below EMA. We can't really take it. I need to see push above EMA. Confirmation, you're going to get new high. Now we expect new high. Remember, we broke the uptrend. We need to get new high. Now normally, if there is some triple test, quadruple test, you can consider buying below EMA. But without any key level, a little bit more aggressive. Can I get a high-low confirmation setup? Price is pushing above EMA. It's confirming. Okay, bulls want to see new high. Can I get a high-low? And now we have a high-low confirmation setup. Initially, I didn't like the fact that we're breaking below EMA. But notice the bullish bar, how strong it is. It's closing quite far up. The higher it's going to close, the more it's negating the fact that the price is broke below EMA. And it's more likely the price is going to go higher. The higher it closes, it's unlikely prices will turn down. I took this setup. high-low confirmation setup of the second entry long, confirming the fact we need to get new high. Downtrend played out, 2 legs down. Market moves in pairs of twos. This is what you want to pay attention to as a price action trader. Paying attention to 2-legged pullbacks, and this is great high-low confirmation setup. I use deep limit order. Either you're going to get filled or not. It is quite big, so no problem using limit order. Okay, you get a failed second entry short here, but I cannot take a failed second entry short simply because, as you can see, we are so close to creating new high. It is gigantic. The goal of using price action rules is to sell at the bottom or buy at the top where the correction phase is ending, so you have room to ride this out. Okay, this is contrary to popular belief. Your common sense keeps telling you, I gotta wait for price action to prove to me where it's going and I have to buy at the very top. No. Even though it is counterintuitive, you want to buy at the bottom of the correction because this is where you're going to catch the major low. It worked regardless, I believe. But you can't risk it breaking new high. But prices keep going higher and we keep going higher. So, important clues here. After breaking new high, we have push up, another push up. And you can see continuous EMA support here, EMA rejections. This is not what is supposed to happen. After breaking new high, I would expect break below EMA, at least some consolidation, correction, or reversal. The fact that EMA held here and you keep trending higher, it's telling me, okay, the trend can be a little bit wider. Can I get some decent trend? And I can. Notice the amount of confirmations here. I can also get a little bit of confirmation here. So the trend fits well. It keeps the structure nice and clean. And because prices keep going higher, the higher it goes, the more it confirms the wider channel is in play. Because after breaking new high, you should have correction. The fact that prices keep going higher is just confirming there has to be some bigger uptrend. So it's quite simple following the price action. So right now you know what you have to do. We draw the downtrend and expect this. 2-legged pullback at the key entry point. Now we have second entry long again. We broke below EMA, it managed to close above. Downtrend played out with the break, push to a new extreme. Now it is off the trend line, you can just tweak it a little bit. It is off the trend line. Because it is off the trend line, closing above EMA, it is decent setup to consider. If you're a little bit unsure, you're buying below the EMA, actually close above, but you want to wait for high-low confirmation setup. Can I get high-low? You can see repeat pattern of what happened here. We have high-low confirmation setup. The signal bar is rather weak. It is not horrible, but there is some tail at the top, but it is only 1.5 points. So you're risking very little. It's high-low confirmation setup for the second entry long. We bounce off the trend line. You know, such a tiny risk. You can even use limit order and risk almost only 1 point. Why not? Decent setup. Quick, small little scalp, actually decent scalp. You have a failed second entry short, but of course you cannot take because the signal bar is bad. We created the new high. I have to withdraw the downtrend working lower. You can see how there is so much empty room at the top. Market is about to roll over, but you broke the new high, so I like it redrawing brand new downtrend. There's a bearish body. It's getting too wedgy. You can see how wedgy it is getting. So you gotta be careful. Okay, we have potential support bounce, but I don't like taking inside bar. Okay, market creating new extreme. So I gotta mark, break, push to new high. So I have to pause looking to go long. And market is trending all the way down here. Perfect. This is what I like to see. No ambiguity about another wider channel. Deep retracement is confirming right now that the brand new bias that is established is bearish. So I'm going to redraw. Brand new downtrend. Deep retracement. Perfect. So I want to see 2-legged pullback at the EMA. I'm going to redraw the uptrend. Okay. I'm going to use the counting technique. I'm looking for breaks below bars lows. Okay, first entry short. So I want to see second entry short at the EMA. Here it also would be triple test. So as a price action trader, you're not only eyeing the 2-legged pullback, but your eyes should be monitoring the area. You can see one bounce, second bounce would be third bounce. The more rules and reasons you have to enter, the better. Can we get a second entry short? Yes, you have a second entry short here, but it's not full at the EMA. You know, you're probably gonna go lower, but I really like to see setup near the EMA. So I gotta be careful. Ended up working perfectly. Break and push to new extreme. I have to redraw the short-term uptrend. So I cannot take second entry short. Uptrend is in play. You have a reversal failed second entry short, but it doesn't feel like good area to reverse now. There was a chance that the downtrend is a little bit stronger. You know, not a bad setup you can consider. I can mark it more aggressive. I wasn't reading this correctly here. I was looking for some wider channel because I thought we were gonna reach new low for the bigger channel from previous day. But we have a breakout new extreme push above EMA. It's inside of the channel. Not a bad setup. But now that we have nice established uptrend, you're already looking for, you already know, the two-legged pullback. Okay. Now, I'm gonna redraw a brand new downtrend because this is massive steep leg down. And we have so many matching highs. I'm gonna treat this as a first entry long only. It doesn't really matter even if you don't reset the count. This is an inside bar, so you still can't go long. But because you have matching highs, massive push down, I like treating this as a first leg on its own. And I'm thinking about second entry long. Why? Because the same thing that happened here, after break of a downtrend, you expect new extreme. After break of an uptrend, I expect new high. So I want to see second entry short on the way down, and I want to see second entry long on the way up. Okay. New high, first entry long, pull back, second entry long. EMA keeps holding once, twice, and this is great. High probability setup. I took this setup myself as well. Prices keep going higher, and it actually offered a very beautiful runner. I took around 8 points. Market keeps pushing higher. It looks like there's a wider channel, but it was too late. Market was about to close. Traders are taking profit, and market is just going sideways towards the close. So this is the overall structure for today. Very, very good price action. This is actually ideal day because every single time you have nice trend line established or break new extreme, brand new trend established, break a new extreme, reversal, brand new trend established, after new extreme, brand new trend established again. And once the trend is in play, you're looking for two-legged pullbacks. So a lot of setups to choose from today. Even though it is not easy trading day as it may seem, because the channels are so reliable today, you could find a lot of good trading opportunities. So I hope you had a good trading day. I'm going to wrap it up. I'm going to talk to you next time. Good luck your trading.